Hi everyone, we are the founders of BeingACCA. I am Punya Agarwal, she's Tushita Gupta, and with this video we are starting a new series which is known as the Real Talk with BeingACCA, and this is kind of a little podcast that we're trying to make. And with this video we're starting with the first episode, and in this episode we're going to talk about all about stock market, investments, all of those things. And a lot of people actually ask us a lot about it because just like me, a lot of people are not very familiar with it. They do not know a lot about stock market, and even I am very newbie. I do not know much about it. But she is a portfolio strategist and a derivatives trader, and she knows a lot about all of these things. So let us have her. I have prepared some questions, some basic questions, which I think we all should know regarding stock market, derivatives, all of these things, and how to do a sound investment in these. And probably she'll help us out in a better way. And yeah, that's all. Let's start with the podcast. Thank you for joining us in this podcast. And we are starting with the first question, which is
Before you do that, I have something to say. So, nobody on planet Earth has actually understood what the market is, how it works. Because the minute you think you've learned something, market changes the strategy. The what was working for you today will not work for you tomorrow.
Yeah.
So nobody on planet Earth is a fully profitable investor.
Yeah.
The end game is to be in a net profit. If you
Okay.
make 10 investments, 6 may be in profit, 4 may be in loss. Nobody on this earth has not made any losses, right?
Okay.
So it's to be in a net profit at the end of the day, at the end of the month, at the end of the year, because sometimes there are rough months also.
Exactly.
So it's about the net profit. That's what your mindset should be. You can never not make any losses. When I started my journey, we come from the educational background where we've been toppers most of our times. We have achieved the professional qualifications. So I have this opinion that what can challenge me, what can I find difficult, right? So I had also started off with this thing that I will never make a loss. But if you want to keep working in the stock market, you cannot not make a loss. Losses and profits are part and parcel of the game. Some days, like in weather, there's a sunny day, there's a windy day, there's a rainy day. So similarly, this is how the market also works. There will be profits, there will be losses. It's all part of the bigger picture.
Absolutely.
So let's start now.
Yeah, so just like you mentioned about your journey, so I want to first ask you that how did you start, what got you into stock market, because this is slightly different thing which we usually do from normal consulting, audit. And since we have done ACCA, so this is something which is a different career path. Of course it is related to ACCA and whatever we learn in ACCA, especially papers like FM.
Yeah.
But how did you actually get into it, and what persuaded you to get into stock market?
All right.
Yeah.
So initially, as a lot of you would already know, that I started off with audit in one of the big four firms. Now, it was very soon that I realized that it was not something for me. Now, if I talk about how stock market got introduced to me, all of my family members work in the finance field. So all the terms that people find confusing, I have been listening to these terms throughout my childhood.
Yeah.
Even though I did not know the meaning, but they have been familiar to me. If you hear something, it
Of
is
course,
it
of
is a
course.
familiar. It
Yeah.
sounds familiar to
Yeah.
you. So this is how the words did not intrigue me as somebody else who is a foreigner to this would intrigue this. So instead of getting scared about it, I was more interested. I was more inclined to learn that they are talking so much about this. What does this even mean?
Yeah.
So that's when I started to research, and I started investing quite early in my in my age. So as soon as you turn 18, that's the time that you can start investing legally, because you have to be 18 to have a PAN card and have a demat account. So I started as soon as I turned 18. My father and my grandfather, they've both been my advisors. So my initial whatever portfolio I have for my investments, something which I do for the long term, is mostly something that they help me with. They do the analysis. Initially, that's how it started. Now even I have learned how to do the analysis, especially what we learned with ACCA. The financial reporting paper taught us the ratios. With FM, we learned even further. So yeah, the knowledge definitely helps me do the analysis better. So this is how I initially started, and now as we keep learning, today also I would not say that we are just learning every day. Nobody has learned anything completely. There's always room to learn more and improve more.
Exactly, and it's not just for stock market, it's in life.
It's for everything in
it's
life. Absolutely.
Yeah. Okay, so let's start with very basic now. So what, for people like me who do not know anything regarding this, what is stock market, and if I want to today start investing, how can I do so from the very scratch?
Okay, so to put it as simple as I can, let's suppose I'm a company. So to run my business, I need money. Initially, I want capital to start my business. You, on the other hand, you are a person who is earning her salary, working somewhere. Now you spend your money on your daily necessities, you go out, whatever you do, but then you save some money also. Now this money, if you keep it in your almirah or your drawer, wherever you keep your money, this money is eventually losing its value because of inflation, multiple factors. Now you want your money to also work for you, to give you some returns. So now this money is lying extra for you. I am in the need of money. So stock market is this third person. So this third person knows you also, he knows me also. So he will introduce us. That you are someone, he will tell me that you are someone who has extra money and can potentially give me that money. I am someone who wants your money. So the stock market is this third person who brings us both together. You have extra money to invest. I want money to start my business, to expand my business. So this is what stock market does. It's basically the middleman. It brings investors and borrowers together so that the economy can function. Your money can be put to productive uses.
And how can somebody start from scratch? Like, what is the first, second, or third step that I need to take to start investing?
Okay, so to get there, there is one thing which I would like to clarify. A lot of people get confused. They think that trading and investing means the same thing. Trading and investing, although they may sound similar, but they are different terms. Trading means I buy today, I sell tomorrow. I buy today, I sell after 2 months, 3 months. When my time horizon is short term, that is when it's called trading. But when I'm doing it for the longer term, that is when it is investing. So let's suppose I buy a Reliance share today, and I keep it with the intention of selling it, not selling it anywhere in the near future, maybe giving it to my children when I die. That is what you call investing. So anyone, if you are really just starting out, your focus should not be to trade. Your focus should be to invest. You build a portfolio from the very basic, so that your objective should be to invest. You should not be just, getting a 30 rupees gain and getting out from that share, which is a lot that you do. And a lot of people also. So your objective to be to build something for the longer term, because these returns can actually compound. So you all probably would have heard about the magic of compounding, how 1 rupee today can over the years become a very big amount compared to just putting in some money for some time then taking it out. So compounding really does wonders. So it's always important to start from investing and not trading. So you start off by buying probably the fundamentally good shares, probably at a time which is good. What time would be good? When the market is crashing.
Of course.
Which is when I advised you to also
start investing.
So I had been telling her to invest for a very long time, and then she finally started investing when I think the election results came out, and it was not what the market was expecting, so the market really went down that day. So that is when I called her and said that you need to start investing today, because the shares are at a very good price available today. So that is when you should start. Start with the fundamentally good shares, and then once you build your knowledge around it, you understand how things work, you do your own analysis about the companies, that is when you can probably enhance your portfolio with other shares.
Alright, so just to summarize, I think first we need to turn 18,
Yeah.
have a demat account.
Yeah.
You have to build your own demat. I think it's a very simple process for
Very
demat.
easy,
For
yeah.
demat, it's a very simple process. You open your demat account, and also one more thing is nowadays we do have a lot of brokers, right?
Yeah.
One of the company, I think the most popularly known as is Grow and
Zerodha,
all of
Upstocks,
these,
many
right?
brokers
Yeah,
are
many
there.
brokers. So do you think that we should go ahead with these, or should we go with the traditional, brokers, or is there some other way also to invest?
See, your broker hardly matters.
Okay.
You can do a comparison, whichever feels the most cost effective to you. You can go with them, because if you only want to invest, I would rather suggest that go with traditional brokers where you do not get to see what's the value of your portfolio on your mobile app, because the moment we see a loss, we feel like we should sell, we should get
This is
out
me.
of it.
This is me.
And the moment you see a profit, you think, let's book this profit, let's exit this investment.
Yeah.
But what if you could earn more? What if your it can go either ways,
Yeah.
but for investing, you have to go long term.
Okay.
Short term, it's not going to do wonders. If you wait for long term, you can get really good returns. Even the people who do their retirement planning, they start investing from a very early age, and then till the time they reach retirement, it's a huge corpus. So that is only possible because of compounding.
Okay.
Yeah.
Okay. Great. So I am assuming a lot of students would be watching us right now. So I would say, as per your experience, what is the amount that they should start with the investing? If somebody wants to invest, what is the minimum, or you say an average amount that you think that they should start with?
I really don't believe that there's a minimum amount to start with. If you're investing, think that whatever money, let's suppose out of, on an average, 30,000 salary is what people usually start with. 30 to 50 is the range. So maybe set aside 10% of your salary that every month you will invest.
Okay.
Right? So you start off with 3 or 5,000 depending upon what your salary is. Now, whatever amount you are starting with, start investing whatever you have. So for the first month, I have 3 to 5,000.
Okay.
I put that in a share.
Okay.
Now next month I have another 3 to 5,000. I can maybe buy a different share. So this is how investing should be continuous. Like whatever money that you save, that you can put in the stock market. Now, stock market is also not the only place where you should be putting in your savings. Some of it should go to FDs. Some of it should go to some, maybe collecting some precious metals like gold, silver. These metals have given tremendous returns over the past few years. So your investments should also be diversified, but that happens usually at a later stage. Initially, everyone, I think, starts with stocks, and once you have that saturation that I've put too much money in the stock market, then you start looking for alternatives. So
Okay. And how is normal buying shares different from mutual funds? Because a lot of people think that we also need to start investing in SIPs, etc. So do you think we should start with SIPs, or shall we start with investing in shares?
Okay, so the answer to this will be, if you are a person who can actively be engaged in researching and making choices for your own self, then investing in individual shares on your own makes sense. But if you feel you have too little knowledge to pick up the shares which you should be purchasing, to decide which company is worth investing or not, these mutual funds, basically, they are headed by fund managers. The one who manages the fund is called as the fund manager. So these are people who are qualified finance professionals. So these are people who do research about the companies, about the market, and then they do the investment. So they manage someone else's money on their behalf. So if you feel you are someone who may not have appropriate knowledge, you do not have the confidence that I have made this investment, what if it turns into a loss, then you can possibly look at mutual funds. But again, mutual funds also do not guarantee you a no loss thing, because if you do not want a loss, you cannot enter the market. Enter only if you're okay with accepting a loss, otherwise don't. The market is not for the weak-hearted. It is not for the ones who are looking to escape losses. If it gives you the opportunity to make money, there is always the probability of losing money.
Of course.
But if you are investing in the right companies, the companies who are fundamentally good, temporarily their stocks can go down, but they will very rarely give you a negative return in the longer run. because
Okay.
they're fundamentally strong. Why do I keep saying fundamentally strong? They are companies like Reliance, Tata, Infosys. They've been in business since hundreds of
Ages,
years.
yeah.
So they are, you can say, pioneers who set up India's industries. They
Yeah.
are not going anywhere.
Of course.
When this entire Adani Hindenburg conspiracy was, unfolding, a lot of people were thinking that Adani would just collapse. That is not possible.
Yeah.
Temporarily, they can weaken the share prices with such sort of reports, but in the long term, nothing like that can sustain. The longer standing industries will obviously win over.
Okay, okay. And with this, I think the next question that comes into my mind is, can you list down some of the commonly made mistakes that first time traders or investors who are very new to it, they usually make while they are investing into, coming into share
I
market?
think we have been speaking about it as we were talking.
Yeah.
One mistake is whenever you see a profit, you try to sell because that profit might reduce tomorrow.
Of course.
Whenever you see a loss, you try to sell because
But
that
sometimes
loss
it's good,
might
no?
increase.
Sometimes it's good.
See, when you are investing, when you have done your research, when you have checked the financials of the company,
Okay.
you should trust your analysis. You should trust your own self. If you cannot do it on your own, go with an SIP or a mutual fund. But you cannot sell the minute you see a profit or a loss.
Yeah, yeah.
Investing has to be a long-term game, right?
Okay. And another thing which I think is one of the mistakes which people do is they search it online. Like there are a lot of Instagram pages, YouTube pages.
Yeah,
They tell that this share is going to go up, this is going to go down. Invest in this share right now, and then we as people, even I'm talking about myself as well. I say, and then I talk to her, and then only I make an informed choice. But for students, for people who do not talk to any other person who is knowledgeable enough to tell them that no, please don't listen to them, do your own research and then go ahead with this. I think this is also one of the mistakes that people usually do.
Yeah.
Okay, and the next question that comes to my mind is, if again I am a fresher and I need to invest, what are some of the sectors do you think that I should start with as a newbie?
Okay, so one I think which goes generalized for every sector is the fundamentally good companies, but pick a time when the market is down.
Okay.
Invest when everything is crashed.
Of course.
Right, because
Makes
everyone
sense.
is panic selling. The
Yeah.
prices are going down.
Yeah.
You know, fundamentally good companies are never going anywhere. So buy when they are at their low. Whenever you see a 52-week low,
Yeah.
buy it then. If it's a
Okay.
fundamentally good company, this does not apply for everything, right? And what else? I would say if you talk about the sectors, think of sectors which are going to grow in the future. Any company which deals with renewable energy, any company which deals with artificial intelligence, technology, any company that deals
EV.
with probably EVs, they are the future.
Yeah.
So invest in the future because whatever you're doing now, if you're preparing for the future now, you will be rewarded with the profits.
Okay.
So they are sectors I think I am bullish on.
Okay, great. So second last question that I have for you is one common myth that you think regarding stock market that a lot of people do have, apart from whatever we have talked about.
One myth.
Yeah.
A lot of people think that it's a way to make quick money. Quick
Yeah.
money, easy money. A lot of people think that their money will just magically double overnight, which does not happen.
Of course.
Even if you invest in the best of the investments, do the best of the trading, your money cannot double overnight. They are fraud schemes which are to lure in the people. If you talk about the data itself, we Indians, we really like the idea of doubling our money overnight, because if you see the comparison between the demat accounts and between those betting apps that we have, they have double the number of accounts in betting apps. So that's the obsession of people here in India, to double their money quickly overnight. So this is something which you people should be getting straight, especially if you're starting out. You are not going to magically double your money. No one can do that for you. Do not fall in these scams or these traps where they tell you that you can double your money in these many days. That's never happening.
Okay, so let us end the session with quick 5 shares, I think, which you can tell students or people who are just investing that they
I'm afraid
should start with just
I'm
normal
afraid
fundamental
I'm
shares?
not a SEBI registered investor, or someone who can give you advice, SEBI registered advice. But I've told the sectors which are
Yeah.
good. So a few of the companies which are working in the renewable sector are a company named as Suzlon Energy.
Yeah.
So they are doing work in the renewable sector.
Hmm.
And then EV wise, I think Tata Motors has been a pioneer for starting the EV business,
Yeah.
taking up to the next level with
Yeah.
launching the affordable versions of the
Hmm.
EVs.
Hmm.
So a lot of companies who are dealing in the sectors that I've mentioned, they are something which you can definitely research about,
Yeah.
do their study, what they are doing, how their future looks like, and if you feel that they are going to progress in the future, you can definitely take a bet there.
Absolutely, yes. So I think with this, we are done with the first ever session for Real Talk with BeingACCA, and I think
Yeah.
this was a good session regarding stock markets. I think even I got a lot of knowledge regarding the
I
same.
hope that the people that we are putting it out for, they
Yeah.
get benefit from it, because that's the only objective why we are doing this.
All right, so with this, we have come to the end of this session. So thank you so much for watching this podcast. If you people have any other topics in your head which you would like us to talk about related to anything, not just ACCA, I think we want to cover more variety of topics now. That is the reason we've started with stock market. And if you want to have any other topics, please comment down below, and we'll be more than happy to talk about that. One.
Yeah, sure.
And do join us in the next podcast. Till then, bye bye.